Shri Gurubhyo Namaha. Today we are going to see the lesson Accounts of Partnership Firm Fundamentals. Okay. So, in this lesson we are going to see introduction, definition, features of partnership, partnership deed, interest on capital, interest on drawings, profit and loss appropriation account. First we are going to see the meaning. Partnership firm is a form of organization where two or more persons carry on some business activities on the basis of agreement among them. See, in partnership we are having a group of persons, or two or more persons will be there, and then they will form a business and then they will carry on the business. Okay. In sole trader and all, what they will do, no, he is the only person running the business. In so many drawbacks will be there in the sole trader. So, because only one person is there, he is bearing all the risk, and then he is only investing the capital, and then he is only managing all those things, all the business activities. So many drawbacks will be there in the sole trading concern. So, that is why the partnership was formed. Okay. And then the person who have agreed to carry on the partnership business are individually called partners. So, who are all joining together and then they are forming the business, that each person is called as partner. Okay, partners, and collectively called as firm. So, overall the persons what they are doing the business, that business is called as firm. Okay, that if any name they are keeping in that business, in the sense that name is called as firm name. Okay. So, the name under which the business of a firm is carried on is called firm name. Okay. The profit or loss arising from the partnership business is shared by the partners in the agreed ratio. See how they are dividing their profit or loss. Okay, how they are dividing. So, according to their capital they will share among themselves, otherwise in an agreed ratio, what they have agreed before starting the business, they will put an agreement. Through that agreement only they will share their profit or loss. Okay. In India, partnership firms are governed by the Indian Partnership Act 1932. In India, we are following Indian Partnership Act 1932 we are following. Okay. So, registration of a partnership firm is not compulsory. Nobody is compelling for registering the partnership. So, there is no compulsion for registering the partnership firm. So, it is optional. If the partners are willing, we can register the partnership, otherwise no need to register the partnership. Okay, it is optional only. So, however, it is safer for the partnership firm to get registered so that the partner can avail the benefits of the registration. If you are registering the partnership firm, in the sense, it will be easy. In future, you cannot face any misunderstanding, you can avoid misunderstanding among the partners. Okay. So, that you can avoid. So, that it is very safer side to register the partnership firm. Okay. Do you understand, children? Next, we are going to see the definition. According to section 4 of the Indian Partnership Act 1932, partnership is defined as the relation between the persons who have agreed to share the profits of a business carried on by all or any of them acting for all. What this, according to section 4 Indian Partnership Act, what they are saying, no, the relation between the persons. So, what relations among the partners? Okay, how they are forming the business, that is very important. So, for example, A, B, C, 3 partners are there. If A is very capable person to run the business, okay, but he is not having enough money. But B is he is having more amount for investing all the business, but he is not having expert knowledge. But C is there, what he is doing, he is getting loan from outside and then he is running the business. Whatever he is earning from the business, he is paying the debt. Okay. So, he cannot manage the business, he is not getting returns also. So, all the A, B, C, all the 3 of them are joining together and then they are forming the business. So each and everybody is having one capacity, okay, so that they are starting and they are running the business. So it is a relationship among that person, okay. So who have agreed to share the profits. So what they are doing, they are fixing an agreement, they are putting an agreement, and then they are starting the business. According to their capital, they are going to share the profit. Like that, if they are putting an agreement in the sense, automatically they will be sharing their profit or loss, okay, according to that, okay. So share the profits of the business carried on by all. So everybody is having equal rights to run the business, and then otherwise some last year we saw kinds of partners and then kinds of partnership firm like that. So sleeping partner, we saw sleeping partner in the sense what he will do, no, he will contribute only capital, he will never do any work in the management, okay, he will never work in the business place, okay, he is called a sleeping partner. Active partner, we saw that active partner, he will never contribute any amount in the organization, but he will do all the management work. So he is called as active partner, we saw last year. So like that. So sometimes all the partner will together they will do the business, otherwise any one partner will take care of the business. So sometimes A, B, C is there, I said no, what A is doing, A and C is a sleeping partner in the sense B will take care of all the business activities, okay. So any of them acting for all, so any one person will act for all, okay, do you understand? And then now we are going to see the features of partnership. Partnership is an association of two or more persons. Already I said more than one person is there in the sense it is a partnership, okay. The maximum number of partners is limited to 50. So maximum 50 persons will be there, okay. In a partnership minimum to maximum 50. There should be an agreement among the person to share the profit or loss of the business. So already I said they will fix an agreement, they will put an agreement, then only they will continue the business. So according to that agreement only the profit or share will be they are sharing, okay. The agreement may be oral or written or implied. Sometimes it may be oral. So they will understand each other in the sense they will say in oral or written document, or it is implied, okay. And then the agreement must be to carry on a business and to share the profits of the business. So the agreement must be only for the business, not their personal thing, okay. It should be carry on the business only, to share the profit of the business. How to share the profit of the business? The business may be carried on by all, and the partners or any of them acting for all. Already I said any one partner will carry on the business, other will be a sleeping partner, otherwise all of them will act for all, okay. And then it is very important, partnership deed. Partnership deed in the sense it is an agreement, okay. Partnership deed is very important to avoid misunderstanding in future among the partners, okay. So the partnership deed is a document in writing that contains the terms of the agreement among the partners. So already I said the agreement is, it is a written agreement in the sense it will be easy for to avoid misunderstanding, I said, isn't it? So the agreement is a document, it is a document like a house document, okay. So document in writing that contains the term of agreement among the partners. So what are all the things should be there in the agreement, that is very important. It is not compulsory for the partnership. So it is optional only, I said, so it is not compulsory to have a partnership deed as per the Indian Partnership Act. So in Act also they are saying it is not compulsory, it is optional. So if it is a written document in the sense it will be safer side for you. And then, but it is desirable to have a partnership deed as it serves as an evidence of the terms. So if in future any partner they are quarreling themselves in the sense, if any one person is going to the court in the sense it is a documental evidence, okay, the documental evidence. So of the terms of the agreement among the partners. So what are all the terms and conditions they formed in the agreement, that is the document evidence of the partnership firm, okay. See, what are all the things will be there in the partnership deed? Okay, contents of the partnership deed. So, what are all the steps we have to follow if you are registering the partnership firm? Okay, so name of the firm and nature and place of the business. First, we should fix the name. So, name of the firm and then nature. So, what type of business you are going to do in that business, and then place where it is situated. Everything we should write. And then date of commencement and duration of the business. When you are going to start the business, and then how long it will take. So, if for example duration, if we are constructing a building in the sense, after the construction over, the partnership will be over. Okay, so that is called as particular partnership, and all last year we saw. Okay, after constructing the building, the partnership will comes to an end. Okay, like that. So, what type of business, and then duration of the business is very important. And then names and address of all the partners. So, how many partners are there, and then name of the partner, and then each partner's address should be there. Capital contributed by each partner. So, each partner how much amount they are going to contribute. So, every partner, see, for one partner is contributing 10 lakhs, other partner is contributing 5 lakhs, or other partner is contributing 2 lakhs. It depends upon the partner, but anyhow you have to write that. And then profit sharing ratio. See how you are going to share your profit or loss. See, it depends upon the capital. If somebody is investing 10 lakhs, or somebody is investing 5 lakhs, in the sense 10 is to 5, 10 is to 5 is to 2, like that. If you are sharing in the sense, that also you have to mention in that content itself. Okay. And then amount of drawings allowed to each partner. See, sometimes what will happen, no, if any partners will take the amount from the company, from the firm, okay, for their personal use. So, personal use in the sense, it will called as a drawings. Okay. So, drawing in the sense personal use, if you are taking the amount from the business. Okay. So, how much you are you can able to take, that also you have to mention. Okay. And then rate of interest to be allowed on capital. So, you are investing capital first initially, and then after that what you are doing, that capital is not enough for you in the sense, again you are going to invest additional capital. Again you are going to give, any one partner is giving in the sense, he is a wealthy partner, that is why he is giving. So, what we should do now, we have to give a certain percentage interest to that particular partner. Okay, so because he is giving more amount, no, that's why capital. Why we are giving in the sense, if you are getting any amount from any outsiders in the sense, anyhow we have to pay the interest, isn't it? But that capital that person is giving in the sense, any one partner is giving in the sense, we have to give the interest for that partner. Okay, so that is interest on how much interest, before itself we have to fix 5%, 6%, how much you are going to give, that also you have to mention. Okay, rate of interest on drawings of a partner. So, drawings already I said. So, taking the amount from the business, okay, for personal use. So, the drawings, if you are taking in the sense, you have to pay the particular amount of interest to the business. Okay, for example 5% or 6%, you have to mention in that content itself. Okay, so how much you are going to give the interest for that firm, that also you have to mention. And then rate of interest on loan provided by partners. Any partner is giving loan for that firm. Okay, so for example, if a partner is a wealthy partner, already I said, that partner is giving additional amount loan for that business firm. Okay, what he will do, no, he will give 5 lakhs for that business in the sense. So, how much we are going to give interest for that particular partner, because he is, if we are getting loan from outsiders in the sense, definitely we should pay the interest. Same way only we have to pay the interest to the partner. Okay, in according to Partnership Act, 6% interest per annum we have to pay, they are mentioning. Okay, that we have to mention in the content itself. And then amount of salary to be allowed to any partner. See, salary in the sense, what we should do, no, See, any partner is, I already said 2 partners are sleeping partner and 1 partner is an active partner. That active partner alone will work in the business. Okay, he is doing all the maintaining work, all the accounts work, whatever work they are having, that person alone doing. So, monthly once we have to pay the salary for that work. Okay, so sharing the profit or loss, that is different. Okay, but we have to pay the salary for that person, for that partner. That also we should mention in that content itself. Maintenance of accounts and audit procedures. How we are going to maintain the accounts, if you are going to appoint any separate person for that or auditor for that, so that also you should mention in the content. Procedure for admission of a new partner. So, if any new partner you are going to admit, you should ask all the partners without inform the other partners. You should not, nobody will enter inside the partnership firm. Okay, if any new partner is coming, definitely we should mention. And then procedure for retirement of a partner and settlement of dues to the retired partner. See, if any partner is not willing to continue the business, he want to quit the business. So, what he is doing, he want to leave from that business, that is called as retirement. Okay. So, if he is leaving in the sense, how we are going to settle the amount for that particular partner. Okay. So, retirement of a partner and settlement dues to the retired partner. Already if so many liabilities will be there, how we are going to fulfill all those things. So, many assets are there, liability will be there. So, how we are going to settle his account, that also very important. Method of valuation of goodwill and valuation of assets and liabilities at the time of admission or retirement or death of the partner. See how we are going to calculate the assets and liabilities, and then in the admission, while admitting the partner, how you are going to calculate, and then retirement, how you will calculate, and if any partner is died, in the sense how you are going to calculate, that also we have to mention in the content itself. Okay. Appointment of executor in case of death of a partner and settlement of dues to the legal heirs. See, appointment of executors in case of death. Any partner is died, sudden death, in the sense what other partners will do. So, how they are going to settle the amount, or any minor, last year and all we saw minor partner, he will come and sit in the, for example, legal hire. Legal hire in the sense who is the responsible for the person, for death of the person, to the legally who is taking care of his assets and liabilities. So, that person will take care of the business. Okay. So, how we are going to settle the amount for that person, that also we have to mention. Settlement of accounts on dissolution of the partnership. If we are going to dissolve the partnership firm, if you are going to stop the business, how we are going to settle the amount, what are all the formalities you are going to follow, that also we have to mention in the content itself. Okay. Do you understand, children? Now, this is very important. Before going to the sum, this is very important. Okay. Application of the provision of Indian Partnership Act 1932 in the absence of partnership deed. Okay. In the absence of partnership deed. See, in the absence of partnership deed, what are all we should follow, that is very important. Okay. So, if there is no partnership deed, you didn't put any contract, any agreement, in the sense how you should follow all those things. When there is no express statement in the partnership deed, then the following provisions of Act will apply. If you are not mention anything in the partnership deed, you have to follow the Indian Partnership Act 1932. You should apply the rules and regulations of the Indian Partnership Act. Okay. So, remuneration of the partner. We didn't mention anything in the content. We didn't mention anything in the partnership deed, in the sense no salary or remuneration is allowed to any partner. We didn't mention anything because already I said sleeping partners are there, and then active partner only will get the salary, I said no. But we didn't mention anything in the content in the sense. So, no salary, no remuneration will be giving for the partner. Okay. And then profit sharing ratio. So, profit sharing ratio also we have to mention in the content itself. If we missed in the sense, profits and loss are to be shared by the partners equally. So, how much amount he has invested, no problem at all. So, they are sharing the profit equally, because we didn't mention in the content. Okay, we left everything in the partnership deed, in the sense what we have to do? We have to share the profit or loss equally. Interest on capital, this is very much important. No interest is allowed on the capital. Why? In the sense we didn't mention anything in the partnership deed. Where a partner is entitled to interest on capital contributed as per the partnership deed, such interest on capital will be payable only out of the profits. So, how much profit he got, how much capital he can give, but the interest on capital they will never give, because we didn't mention in the partnership deed. Okay. So, if we left the interest on capital in the deed itself, so we will never get the interest. Okay. Interest on loans advanced by partners on the firm. Sometimes interest on loan, already I said, interest on loan is to be allowed at the rate of 6% per annum. So, if they left in the sense also, no problem, 6% per annum definitely they should give. Already I said the loan, if we are getting loan outside person, in the sense automatically we have to pay the interest, no. Same way we have to pay the interest for the partner. Okay. So, 6% per annum definitely we should pay the amount. Interest on drawings. No interest is charged on the drawings of the partner. Already I said drawings, in the sense taking the amount from the business, personal use. So, if we are taking, in the sense we have to pay the interest for the firm. Okay, interest to the firm, but we left in the sense we didn't write anything, we didn't mention anything in the content, in the sense no drawings, no interest on drawings will be charging. Okay. Yeah. See, methods of maintaining capital accounts of partners. Now we are entering into the sum. Okay. So, two methods we are following. One is fixed capital method, another one is fluctuating capital method. So, amount invested by partner in the partnership business is called partner's capital, that you know very well. So, whatever amount they are investing, that capital is called as partner's capital. Capital may be contributed by the partner in cash or in the form of assets. If they are willing, they can give cash or assets or stock, whatever they need they can give. Okay. For each partner, a separate capital account is maintained. So, each partner is maintaining each separate capital account. Okay. Capital accounts of the partners of a firm may be maintained by following two methods. There are two methods to maintain the capital account. One is fixed capital method and another one is fluctuating capital method. Now we are going to see fixed capital method. In this method, we are going to see the partner's capital account first, and then we are going to see the current account. Okay. So, partner capital separately we are going to do, and then partner's current account we are going to do separately. Okay. In this partner's capital account, what are all the things will be there? No, capital is a liability, you know that very well. So, capital is a liability, in the sense opening balance will be comes in credit side. If it is an asset, it will comes in debit side, that you know very well, already I said for last chapter itself. So, capital account opening balance should be comes in debit side, and then cash or bank. So, additional capital again if you are introducing, in the sense that also we have to mention here. So, additional capital also you are going to mention here, and then cash or bank, here also on cash or bank is there, here also on cash or bank is there. Why miss, you are asking. So, this is additional capital, this is permanent withdraw money, permanently you withdraw money from the business, in the sense that you should mention here. Okay. So, permanent withdrawals. So, you have to bring it here, and then you have to calculate all those things. You have to add both the columns and then you subtract with this amount, in the sense you will be getting the closing balance. Okay. So, copy this format. Next we are going to see partners current account. Okay, partners current account. See, partners current account, what we are going to do, in current account, what are all the amount we are receiving? For example, I am the partner, okay. So, what are all the amount I am receiving from the business? I am going to credit everything here, okay. So, what are all the amount I am getting from the business? I am the partner, I am saying clearly, you can understand. So, I am the partner, what are all the amount I am getting from the business, I am going to credit here. What are all the amount I am going to give to the business, I am going to give, okay. So, I am going to give to the business, in the sense I have to debit. So, this is the easy thing you can understand, it is a easy hint, okay. So, first what we should do, no? So, sometimes partners current account, sometimes it may be opening balance will be in debit side, sometimes it may be in credit side, that they will be given in the question itself, okay. So, no problem at all in this. So, by balance brought down, here also by balance brought down, okay. So, sometimes it may be debit side, sometimes it may be credit balance, okay. And then interest on capital. So, by interest on capital. Why interest on capital is coming here, in the sense, I already said what are all we are giving to the partners, what are all we are giving to the partners, that we should write it in the credit side. So, interest on capital we are going to give to the partner only. So, that is why I am crediting here, okay. And then by salary. And then by commission. By profit or loss, appropriation. See, by interest on capital already I said, by salary also the partner is only receiving, okay. And then commission, if he is doing something for that company, he will be getting commission, that also we are writing in the credit side. And then profit or loss appropriation, already they have given in the question itself. So, if we get profit in the sense, you have to write it in the credit side. If we got loss in the sense, you will be writing in the debit side, okay. And then balance, opening balance, sometimes it may be debit side or credit side, I already said. Same way the closing balance also, okay. And then drawings, you have to write it here. And then interest on drawings also, because the interest on drawings they have to pay to the company only, okay. So, that also you have to write it in the debit side. And then profit or loss appropriation, because profit in the sense you have to write it in the credit side, if it is loss you have to write it in the debit side, okay. Do you understand this format, children? Copy this. Now, we move on to the sum, okay. From the following information, prepare capital account of partners Shanti and Sumati when their capitals are fixed. So, now we are going to see the fixed account, okay. So, fixed capital method only we are going to do, okay. Partners capital account. First, we have to find out partners capital account, okay. So, date, particular, so Shanti, Sumati, and then again date, this is debit side, this is credit side, okay. Date, again particulars, and then Shanti and Sumati, okay. So, the capital on 1st January 2018, 1 lakh 80 lakhs, okay. So, first this is a capital account, opening balance should be comes in where? Credit side, because capital is a liability, already I said. So, capital should be comes in credit side. So, 1 lakh. January 1st, opening balance we should write here, okay. By balance brought down 1 lakh. Here 80,000, okay. And then what we should do? Current account on 1st January 2018, credit side. So, first we are going to calculate capital account only. So, what we should see? So, capital, additional capital introduce, and then drawings permanently, that only we have to take it, okay. Additional capital introduce here, January 1, cash or bank, additional capital, okay. How much they have given? 10,000, and then here 20,000, okay. Additional capital, put it in the box. And then here what we should do? Drawings during 2018, 20,000, 13,000, and then interest on drawing, share of profit, interest on capital, salary, commission and all they have given. So, we should take only drawings, okay. So, in here they are not given the permanent drawing, okay. So, permanent withdrawal they did not give. So, we left that drawings, okay. To balance brought down, how much it is coming? 1 lakh 10,000. So, 1 lakh, okay. So, here also we have to calculate, here 1 lakh 10,000, 1 lakh, okay. So, So here they didn't give any amount, that's why I am writing here. This is the closing balance. Okay, you have to bring it here. By balance brought down 1,10,000 and then 1 lakh. Okay, do you understand, children? Copy this. Now we are going to calculate the partner's current account. Okay, partner's current account. Same way we have to write. Okay, this is debit side. So date, particular, Shanti, Sumati, again date, particular, Shanti and Sumati. See, already I said opening balance they will be giving in the question itself. Okay, here also they have given current account on 1st January 2018, credit balance they have given. Okay, you have to write the credit balance by balance brought down January 1st. Okay, 5,000 and 3,000. Okay, and then what we should write? By profit or loss appropriation. So here also they have given share of profit 2018 10,000, 8,000. So that is by profit or loss appropriation. Okay, so 10,000 and then here 8,000. And then interest on capital by interest on capital. How much? 6,300 and then 5,400. And then by salary. Salary 9,000. But this one they didn't, she didn't get any salary. And then by commission. Commission 1,200. Okay, and then here two drawings 20,000, 30,000, and then 2 interest on drawings. Interest on drawings 500, 300. Now we have to calculate both the columns. Okay, 30,300 and then 17,600. We have to subtract with this amount to this amount. We will be getting to balance carry down. How much? 9,800 and then 4,300. Balance brought down 9,800, 4,300. Okay, copy this, children.